The guy from The Big Short just did it again. Michael Burry, the man who predicted the 2008 housing collapse and made billions when the world was losing everything. He just placed a $1 billion bet against artificial intelligence stocks. Now that might sound just like another headline in the stock market world, but if he's right, and history says that he often is, this could send shockwaves far beyond Wall Street, because if AI stocks collapse, crypto could be next. In this video, I'm going to break down exactly what Burry said, why he's shorting AI, and how a collapse in that sector could create a domino effect that slams the entire crypto market. We'll also look at what you can do to protect yourself or even position for opportunity if the AI bubble really does burst. So let's start at the top. What did Michael Burry actually do, and why is the world paying attention again? Michael Burry's investment firm, Scion Asset Management, recently filed new positions with the SEC, and what those filings revealed shocked everybody in the markets. He's taken massive put options, which basically means he's bet a stock price will fall against two of the biggest names in AI, NVIDIA and Palantir. I know what you want to know. How big are the trades that he's done? They are over $1 billion US combined. That's right. He has said he's going to short the market with using $1 billion of capital. He's done roughly 187 million in puts against NVIDIA and over 900 million in puts against Palantir, both companies that have become icons of the AI boom, and both now facing the wrath of one of the most legendary short sellers ever to exist. So why has he picked these two? NVIDIA is the engine behind the entire AI movement. Their GPUs power everything from ChatGPT to robotics to self-driving systems. Its stock is up more than 250% in the past year alone. Palantir, on the other hand, brands itself as the AI brain for governments and defense by modest earnings and stretched valuations. To Michael Burry, this smells like a 2008 all over again, a market disconnected from reality. He hasn't said much publicly, but in a recent post on X, he hinted at this. He said, "Sometimes we see bubbles. Sometimes the only winning move is not to play." And here's the key point. Burry isn't just calling out overvaluation. He's saying the entire AI rally could be a bubble built on belief rather than balance sheets. When Burry places a trade like this, he's not trying to make a quick profit from a small dip. He's positioning for a complete collapse, something big enough to retest an entire sector. And if that happens, it doesn't stay contained to tech stocks, because AI has become the heartbeat of risk-on sentiment in global markets. It's what's driving hedge funds, institutions, and retail enthusiasm everywhere. If AI stocks implode, risk appetite across all markets will shrink, and they will shrink fast. That means less liquidity, tighter funding, and panic selling. And history shows that when stock market sneezes, crypto catches the flu. Think back to early 2022. Tech valuations started to crumble and Bitcoin followed within weeks, dropping over 60%. Same story in 2021 when stimulus dried up, tech and crypto both tanked. So if Burry's bet is right and the AI sector unwinds, we could easily see a repeat of that same risk-off rotation. Money would flow out of speculative assets and crypto would feel the first hit. Let's talk about how these two markets are intertwined. AI stocks and crypto coins share the same DNA right now. They're both driven by narratives and future promise. Investors are buying what might happen tomorrow, not what's profitable today. So when fear enters that space, it doesn't just stay in AI. It spreads across every speculative sector. Another connection is liquidity. Institutional funds that trade AI mega caps often hedge. They rebalance and rotate capital through the same risk-on channels that hold crypto. So when big funds start timing risk exposure, Bitcoin, Ethereum, Sol, they all get hit as part of that liquidity unwind. Then there's sentiment. When the everything bubble cracks, whether it's tech, AI, or even housing, retail traders panic. They sell the things they understand the least, and for most retail investors, that is crypto. So while Burry's billion-dollar short might be targeted at Wall Street, the aftershock could ripple straight through the blockchain economy. And before we go further, as a quick side note, if you wanted to be able to trade both AI stocks and crypto on one easy-to-use platform, I personally use eToro. It's beginner-friendly, it's regulated, and it lets you buy stocks, crypto, and even copy trade professionals. If you want to check it out, my personal referral link is down below in the comments. Remember, always do your own research before you trade. But if you're serious about navigating markets like these, it's a great place to start. So let's play this out. What happens if Burry is right and the AI sector takes a major hit? First, you'll see valuation compression. Stocks like NVIDIA, Palantir could retrace 40 to 60% if earnings can't justify their price. That would wipe out hundreds of billions from market caps overnight. Next comes the volatility spillover. Funds holding AI equities will have to reduce exposure elsewhere to manage these calls. That's when Bitcoin, Ethereum, and the entire alt market start seeing red candles for reasons that have nothing to do with crypto itself. Then comes the narrative shift. Right now, AI is driving optimism, tech innovation, productivity, future profits. If that narrative cracks, the market mood shifts from innovation to deflation. People stop chasing growth and start hoarding cash. And that's when liquidity drains out of crypto the fastest. Because when people are scared, they don't hold volatile assets, they hold dollars. Now here's where things get interesting. Historically, every major crash creates the foundation for the next bull market. When the dot-com bubble burst in 2000, the survivors like Amazon, Apple, Google went on to dominate the world. And if the AI stocks do collapse, the real AI companies with true utility will emerge stronger. And the same principle applies to crypto. If risk comes off the table, weak projects will die. But the coins with genuine utility, adoption, and liquidity will be the ones that rebuild the next wave. That's why, instead of panicking, I'm preparing. I'm reviewing charts, tightening stop losses, and building cash for opportunities that could show up when everybody else is fearful. And this is also exactly why inside the Crypto Wolfpack, we track sentiment, liquidity, and big money moves every single day. Because these shifts are where the real money is made. Let me show you something really quickly. This is our win zone inside the Crypto Wolfpack community. These are real trades from real members, people learning, applying the strategies, and sharing their results. You can see screenshots of the winning trades, breakdowns of entries and exits, and the exact logic behind them. And the best part is, anybody can participate. Whether you're trading manually or using any automation tools, you can get involved. This is what community looks like. Traders helping traders, people winning together. And if you want to learn my exact trading strategies for free, I've put together the Crypto Liftoff course. It's a full video training showing the exact system I've used to make money in both the bull and the bear markets. You can access it right now. It's completely free and the link is in the description. Looking at some of these now, we've got Stu Stocks, who's got a 74% win on XRP. You've got Simon with a 34% win on Bitcoin. We've got a 63% win on Fartcoin. That's my children's favorite crypto name, by the way. We've got Martin with a 21% win. What else have we got here? Here we go, there's another one there. We've got a 56% win on IPC. We've got a 70% win by Marky Mark on Ethereum. He did a 25x long on that one. Well done, Marky Mark. We've got a 59% win on a 20x long on Giggle. And an absolute whopping 142% win on a 20x short on Hook. Well done, Simon. Top guy you are, mate. Right, back to the story. Whether you agree with Michael Burry or not, there's an important lesson here. Markets don't move in straight lines forever. Whenever the crowd believes in something that can't go down, that's usually the first warning sign that it can, and it will. AI stocks have become the new can't lose trade. And when euphoria replaces logic, that's when smart money quietly starts taking the other side. Burry might not time it perfectly, he rarely does, but he often sees things before everybody else. And even if his short is early, it's a signal that risk levels are rising. So instead of chasing every green candle, step back and ask yourself these things. What happens if liquidity does dry up? What happens if the AI narrative cools off? Where will money flow next? And how can we be positioned when it does? That's what separates gamblers from traders. The gamblers chase hype. The traders manage risk, prepare for both outcomes, and survive long enough to win big when others are wiped out. Here's what I'm doing personally. Diversifying exposure. I still hold core crypto positions, XRP, Bitcoin, Ethereum, but I'm still keeping cash ready. Reducing leverage. No need to chase the 100x when volatility is already through the roof. Watching key correlations. If AI stocks start dumping and Bitcoin follows, that's confirmation the markets are risk linked again. And I'm using automation on some of my trades so that it's based on technical triggers, freeing me from emotional decisions. If we don't get a big correction, it won't be the end of crypto. It'll just be a chance to rebuild positions at better prices. The key is staying calm, staying informed, and thinking like a professional, not a tourist. So yes, Michael Burry, the man from the Big Short is betting against AI. And whether he's right or wrong, his move reminds us that markets can flip from greed to fear in an instant. If AI stocks collapsed, expect big moves, expect risk to unwind, and yes, expect crypto to wobble. But also remember, when everyone else panics, that's where real money is to be made by real traders. If you've got value from this video, drop me a like, subscribe, and let me know your thoughts in the comments. Do you think Burry is right, or is this just another overhyped headline? And don't forget, if you want to learn the exact strategies that I use to trade crypto successfully, my crypto liftoff course is completely free and the link is down below in the comments. You'll also find my link for eToro, where you can trade both AI stocks and crypto all in one place. And again, I'll see you on the next one. Stay sharp, stay focused, and as always, the strength of the wolf is in the pack. I am not a financial advisor. This video is based solely on my opinion on what I am personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I am not a financial advisor.